episode of Mindset Monday. This is September 2023. I hope you had a spectacular week and I hope you had a wonderful weekend. Today we are on the topic of preparing for your wealth, and we'll be focusing on tax planning. Now, a lot of us might say, why am I doing tax planning in September? But September is a month to remember that once you start your tax planning early, you'll be able to maximize deductions. You'll be able to have your documents properly organized. So when it's time to take them to your tax preparer, your enroll agent, or your CPA, you will be equipped. Also, we are looking at tax planning now because there may be changes in the tax laws, and you having a briefing or a little knowledge about what's happening, you can have a more knowledgeable conversation with your tax preparer, with your tax advisor, with your financial advisor, because a lot of things that happen affects the way taxes are prepared. So today we will be looking at few things that you should bear in mind, questions that you should ask yourself or even ask your tax preparer, your tax advisor, your financial advisor, how to maximize the benefits so it will be of more value to you when you file your taxes. And you could even help other taxpayers. The little you learn, you can also share it with whomever you desire. So it's tax planning. And over the years, or for the most part, we wait until for W-2 employees, that's someone who works who trade their time for money. You work with an employer. We normally wait until we get our W-2s, which is normally January 31st. And then we say, okay, we're going to file our taxes. But to be on a more prepared side, it's best to start now that you can have everything, or for the most part, most of the things you need in order to file your taxes. You will not be running at April 14 to say, oh my goodness, I forgot. No, but you'll be more prepared. And not only prepared, but you'll be able to identify things that are new or things that you may have missed the year before, so you can maximize your deductions. So some of the questions that some of our guests ask, I'm just gonna deal with them today. One of them is asking, how can I maximize my deductions? And it's several things. I'm sorry, I'm going to sneeze. There are several things we can look at in maximizing our deductions. One of which is maximizing retirement contribution. Now, retirement, paying into your company's retirement system, it's a good idea to save money because a lot of us, we actually don't save. But this is a way that you can put some money aside before you actually get it in your hand. So we call that pre-tax dollars. So ensure that you are maximizing on your retirement accounts, such as 401k or IRA. that will help to balance things out. These contributions provide significant tax benefits, including tax deferred growth or tax deductions. We look at another way that you can maximize deductions. Take advantage of different tax deductions. Uh, you can look at certain available deductions, mortgage interest, medical expenses, charitable contributions. These definitely can significantly reduce your tax liability or your taxable income, because the higher your taxable income is, the greater your tax liability or the less refund you may get back. So those are some of the ways you can. And how do we do that? For those of you who have huge medical expenses, and if you find that you are you are going to incur these huge expenses, say you were thinking of doing something last year, and then this year you find that the huge sum would assist in increasing your deduction. So with that huge medical expense, you can now itemize your deduction, and you will be able to reduce your tax liability, as I'd explained before. Another one is charitable donation. A couple weeks ago, I spoke about charitable donations. And since the Tax Cuts and Jobs Act, since the revamp, I know for the most part, a lot of taxpayers no longer have enough to itemize because the standard deductions went up, and there are also some unreimbursed job expenses that they're no longer attributable in the tax law. It's null and void. So, with all of that, a lot of taxpayers are no longer able to itemize. So, those deductions that normally help to reduce the tax liability or give us back a little more refund, it's no longer applicable. But if you are contributing, you may have a fund, you may be contributing to one of those worthy causes, one of those qualified places that you can get deduction. You may be paying, say, $350 per month. And if you find that you're able to pay that entire sum that you pledge to the charity, you can pay that for that 1 year. You may be able to maximize that deduction, and you could be able to itemize, so your tax deduction drastically, your tax liability drastically reduce, or your refund drastically increase. So speak with your tax professional. If you're one of those who have pledged, say, $10,000, you may have pledged $10,000, and with your mortgage interest and the contribution, the charitable contribution, and other little things, you may be able to itemize. That's the Schedule A on your tax return. And you may be able to get back a little bit more. So that's another way you can maximize the deduction. So planning now, you still have time. September is still here, October, November, December. So if you are planning on giving, instead of spreading it over a 3-year period, if you can find that money to give that contribution one time, it may benefit you better instead of scaling it over a 3-year period. That's a good tax planning strategy. Another one, Let me see. And I know for the most part, some of us may start going to college, whether it's your child or the taxpayer. Make sure that you check with your tax professional because your education credit is also one way that can reduce your tax liability. And it also depends on your tax bracket because the higher tax bracket, there are some deductions that is not applicable. But for the most part, it could give you some deduction. So check with your tax professional to make sure that you are qualified for those deductions. So, unlike deductions, tax credits reduce the actual amount you owe in taxes, like child tax credits, energy efficient home improvement credits, education credits. So, all of those credits help to reduce the amount of taxes you owe. So, if you follow the 1040, you will see the taxes is calculated up top. And then there are several different lines down right down there where you have the credits. So the credits, the amount of credits that falls down here compared to your tax liability up there drastically reduce that tax liability, and you end up paying Uncle Sam much less, or you end up getting back a little bit more refund. So, you see, tax planning is not that crazy of a deal in September when you have time to think about things, not waiting until April 15th, April 14th, or April 15th, 7 o'clock to call your tax professional and say, I forgot I need to file my taxes. No, but you are prepared. You are taking proactive steps in getting that document, in putting them together. If you have a little box, or Staples have those nice little boxes that you can use, those containers, and it's see-through container, so you can just put tax documents and you put them away. And then what you can do, you can get your Excel spreadsheet and put your all the details there. More so for those persons who are just starting their little business. Mark you, we were always going to a job, getting our W-2 and just putting it together. Once we get the W-2, we take it to the tax professional. But if you start a little side business, a little self-employment thing, you know that there are certain deductions. You have expenses. You buy the staples, you buy the office products, you buy your cleaning products, depending on what business you're doing. So all of those are expenses that are attributable to the business you're doing. So get one of those little boxes. You may not want to get a software because you're not making that money yet, but start from somewhere. you know Train yourself to be organized so you are not commingling things. So when it's time to file taxes, oh, I forgot about something and I can't find the receipt. Have that little space. You don't have to even rent an office. You just get the little plastic container, put those things in, so you are ready when it's time to take your documents to file your taxes. Once you have things in one place, you are better able to have an informed discussion with your tax professional. Right now, you may be saying, oh, I got a piece of document and it seems as if it has something to do with taxes, but I wasn't too sure. Now go back, look at it, take it to your tax professional. They want to hear from you. Although they're busy, we want to hear from you because it helps us to prepare you that we are better able to take care of everything that comes in front of us. Sometimes you may ask us questions as tax professional, as financial advisors. We're not able to give it to you right on spot, but we will do research. Just like you go to a lawyer, the lawyer may not have the information right off the bat because everything is not stored here. We go where we can find the details. The lawyer will go to their volume of information based on the laws they're dealing with, whether it's a tax law or uh, whatever, it's a real estate law, whatever it is, they will go to the volume of their books to see the specific thing you ask and get you the information you need. But it's very good when you take proactive steps in doing something, in finding out things, and then you can say, Miriam, I saw this. I don't know if it is applicable to taxes or my taxes or whatever, but give me some information. Or what do you think about this? And I will say, let me check and get back to you. Or if I know the information, I will say, this is what it is. So being proactive, it makes a world of sense. Okay, there's one more. Uh, how do we maximize tax deductions? Another one, monitor changes in tax laws. Mark you're not tax professional, but just looking at irs.gov, I know it may seem so foreign. What is this I'm reading? But if you go on irs.gov and you could just write changes in tax laws, you may not understand the details of it, but you will see, oh, this has changed, or the deductions for energy efficient home improvement, it has increased, and how does that benefit me, and what do I do? This is where we come in. What is energy efficient home improvement? What is that? And we will share the information with you. We will do our research and we'll explain to you, okay, if you install energy efficient uh, home improvement products in your house, it will increase the value of your house, or you will get a tax benefit depending on. So we will get the information to you. Now, as I alluded to earlier, organizing your files, organizing financial records help you maintain a proper mindset throughout the year. So at the end of the year, you'll be well prepared to take them to your tax professional. You'll be so happy. You'll not be helter skeltering all over the place and say, I got the W-2, but where is it? Or the mortgage interest statement, where this? Although you can go online and get your mortgage interest statement, but if they send it in the mail, because I know for the most part some people still opt to get their snail mail, others opt to get electronic copies. But whatever it is, just organize your financial records. This can simplify tax preparation process and ensure they don't miss out on any deductions or credits. So it behoves us to organize our documents. And it's not only for taxes, but if we can organize things, it will make life so much easier. Case in point, whenever I whenever I get home from wherever I go, I normally have a place that I hang my keys. And I can tell you, if I'm distracted when I get home and I veer off to do something else, If that key is not in that place, I'm just so confused because I don't know where it is. Because I've developed the habit over the years to hang it at a particular place in the house, hang it behind the closet door. Now, if it's not behind the closet door, Miriam, where is the key? And it can take sometimes 15, 20 minutes, and you can be so flustered because, especially if you are on time for where you're going. Now, if you're on time and you take 15 minutes to look for that key, you're late. So, organization, it's not only for tax planning, but if we organize our life, we will have less stress. You know, the flight or fight hormone that just comes, the adrenaline just running all over the place. And then you get frustrated with people, and then you're fussing at people, and they don't have anything to do with you losing the key. So, organizing our life, it flows into everything: tax planning, organizing our financial records so we don't miss out on any deductions. Another one, as we were talking in our last episode, we were talking about those who are self-employed or partnerships. Estimate quarterly taxes if you are self employed. For those running their own businesses or freelancing, paying estimate taxes can prevent penalties, yes, and reduce the year end tax burden. So the next the next time you are thinking of, or you're looking at your tax information, I know you know last year what you owe, or the refund you get. But for those who are just starting business, it's good you make sure you speak with your tax professional. Just go show them what's happening, because you may just start a business and you're really getting some good monies. You're getting some good money. So speak to your tax professional and say, listen, I am getting this. I just started this gig and I'm getting this whole heap of cash. My refund was this last year and I don't have much expenses with this business that I just started. What do I need to do? They will tell you, make estimate payment. So once you make estimate payment, the tax burden will reduce. You won't be paying back too much. But if you wait until the end of the year, your additional income that you get from this investment that you make, this freelancing thing that you do, 20, 30,000, can you imagine? You'll be paying that money. You'll really realize that you have a bigger tax burden, bigger tax liability to pay at the end of the year. So get that to your tax professional. Don't wait until the year end. Once you're starting something new, if you were a W-2 employee, and you start something, just sit with them. Just say, listen, I start this thing, what do I need? Or what is it that I need to be doing now that I start this new gig? Because remember, with your W-2 job, they're taking out taxes from your paycheck before you get it. So you don't necessarily have to worry, unless you just start a job and you're solo and you end up putting several different exemptions. So they may be taking minimum taxes than if you had just put zero, or you allow your tax professional to help you to fill out the W-4 or the state form, whatever that form is, because different state have a different number form to take out their withholding. So get that done. Queen Dr. Benny, welcome. Good to have you. Okay. The next one we look at is invest in tax advantage accounts. Two of the tax advantage accounts are the health savings account and the flexible spending account. Those offer tax benefits. They contribute to tax deductibles and withdrawal from qualified expenses. They can be tax free. Now, with the health savings account, make sure that you do not put too much in it, because the or is it the flexible spending? Speak to your tax professional and they will also help you to set that up, because that will, for someone who have, huge tax burden, and there are some things that your insurance do not cover, so you can use those pre-tax dollars and open the health savings account, and then you can use that to pay for some of the things that your insurance do not cover. Okay, Queen Dr. Benny says, I'm a W-2 employee. You're on the point, my queen, that my company are cutting a lot of taxes from. Yes, yes, yes. So just going back to that, if you're a W-2 employee and you want to maximize your deductions, you could find out how you can max out your 401k. You could find out how you can do that. And also, it's good if your company matches. There are some companies that match, there are some companies that don't. If your company matches your contribution, it's good you take advantage of that. Now, one of another way you can maximize your deductions is finding out the right time to buy or sell investments. You could speak to your financial advisor, and because it's not a one size fits all, everyone have different things that they deal with, different family dynamics. So find out from your financial advisor when is the right time to buy or sell investments. Holding investments for more than a year can result in favorable long term capital gains. Now, the long term capital gains rate is different from short term. Um, and harvesting losses can offset gain. So when you sit with your tax professional, all of these things, because you're being aware of them now, you can have a very informed, chat. Say, I hear about these things and I want to know more. How can you advise me? I have this to do. I want to buy this. I want to sell this. How can you help me so I am in a better position when tax time comes? So, being prepared, being aware, being proactive, it gives you a better sense of knowing. It also gives you peace of mind, because knowing, understanding, and then you can make decision the best way to go. Now, you may not be able to do all of that for yourself, although I know AI is some of the tax programs, or most of the tax programs now, are incorporating AI in their in their sequence of things. So a person who is a W-2 employee, they will get their W-2 and they will look at the different lines, and you can plug in and they can tell you, oh, this will be your tax liability, or this is your refund. And it is very intuitive now, more than a year ago, with the advent of AI. A lot of taxpayers will now be able to do their taxes. But if you have huge investments, don't make the mistake of doing it for yourself, because you may not understand a lot of things. Though AI will help to enhance, but a lot of things are still not applicable as yet in the tax program. So you still need to hire a tax professional, because sometimes tax situation can be complicated. So hire a tax professional, whether a CPA or an enroll agent like myself, who can personalize giving you advice and also maximize your tax savings. Make sure, because the truth is, if something is wrong with my body, I'm not going to go and talk to a plumber, because the plumber does a very good job in making sure that my pipe is squeaky clean, making sure that the leaks fix and all of that. But they cannot help me with my medical condition. Likewise, you may be a doctor, you know a lot about different things. You may be a medical doctor, you know about medical intricacies, but where taxes is concerned, you need to come to the professional who can help to navigate you through the areas that you are not knowledgeable about. Okay. Now, as I talk about the little box for some of us who just start our little gig, it's very, extremely, very important to keep track of business expenses. We were talking the other day about opening a business account. Now, I know for the most part, the business accounts, once you open them, there's certain amount that you have to keep in that account in order to minimize the amount of expenses that you pay for fees. So if you are just starting out, speak to your bank. You can get another regular checking where you can put your business and your personal, separate them. So for good practice, you are separating the whole thing. Now, when you go to buy your stationery, go to buy anything that has to do with your business, that will come from your business account. And those expenses, of course, will be there on your bank statement when you are ready to do your taxes. So keep track of your business expenses, no matter how minute it is. It's a business expense, so the deductions are valuable. So keeping detailed records of business expenses can help to ensure that you don't miss out on any crucial deductions, and that will also lower your your taxable income. A lot of times, we miss out on things because we are not proactive. We don't take steps in doing things, in preparing, in organizing. So we miss out on the deductions that we should have gotten, or it's rightfully ours, but because we are sidetracked, we are blindsided, we miss them. And then you hear, oh, this could have been done. But all is not lost. If you have missed out on certain deductions, now that you hear us talking and you think that you may have seen something that could benefit you, speak back to your tax professional, take your return to them so they can look at it, and they could amend the return so it if you can see that favorable result. You may have missed certain deductions, and then once the return has been amended, you may end up getting a refund. Or you may have missed a 1099 and you underpaid. Get the review if that's the case, that you can pay Uncle Sam, because if if the return, if some amount of income has been as is missing, it takes sometimes 2 3 years before IRS may write you. When they write you, you'll be paying penalties and interest for that year that you filed the return that the income was not reported. So check to make sure that all the income was reported, and check to make sure that you have gotten all your deductions. Whichever way it is, make sure that you are in the right by getting it to before your tax professional, and they can help you out. It's very important that we do that, because I have known of people who miss something. They did not know that they got a 1099, or because they were not keeping their records. Because when you do business, when you are freelance, if you're keeping track of your of records throughout the year, you may be aware that, no, I did this every month, and I got $1,000 for this each week. So something is missing. That means I should have more. This 1099 is not correct. Get it corrected, because once these 1099s are done, a copy goes to the IRS, so they have records. So if that income was not reported, then IRS will write you, and they will either redo the return and add that income, or they write you and said that the income was underreported. So make sure, start putting your things together. Get that little plastic box from Staples or Amazon. You can order them online, and just have that little box. Put your stuff together so you can be prepared. Remember, we are preparing for wealth. It starts from the mind. It starts from the mind. So get those things done, put them together, so you are in the know when it's time to do your taxes. Theda King, welcome. You said we agree that we should consult with tax professional about our taxes. Yes. Yes. Make sure you consult with your tax professional, because that's the only way. You consult with the doctor when something is going wrong, and then they may send you to do a test. They send you to do a test so you can get the right the right medication, or you can either desist from doing something that you were doing that was causing that issue. So like, you go to a doctor, I would say go to the tax doctor, which is your CPA, or as myself, an enrolled agent, or another tax professional who is able to share with you what you need. Okay, Tensi said, what's your advice to self-employed? Okay, for self-employed, we go back to, if you are just starting out, make sure, keep track of your expenses, keep track of your income. Make sure that every single solitary thing that you buy for the business is documented. I know for the most part we have a card that we use, and all of that comes off, but make sure whatever you do, all of your expenses you keep track of, all of your income you keep track of. A couple of weeks ago we talked about, for those who are self-employed, regarding life insurance, health insurance, all of these things. Sit down with the your financial advisor, your sit down with somebody who is knowledgeable, and they can help you. We can help you, steer you in the right direction, because we don't want you to say, if me did know, if I had known. That should not be something that would come our way, if me did know. We are sharing this information so you are in the know. You are a little bit more knowledgeable. When you sit with your tax professional, you can say, so why is this and why is this? For the most part, whenever I do the taxes, especially for the personal return, I share with my clients, uh, line for line. And sometimes they ask, why is this so? It's my responsibility to educate them as to why they get what. And it alleviates a lot of issues because they are now aware, oh, I see. And then they'll be able to know what's happening and be prepared. Okay, so why did I not get a refund this year? If it's someone new that comes to me, I look at their last year return and show them, okay, you were a W 2 employee last year. Now, this year, you are actually had freelance, and you got all of your money up front. See, on your W 2, they took out this amount of taxes, but the business that you were doing, they paid you through 1099. So you get all of the money. So for 1099, and for 1099, you have all of the money. So if it's a W-2, the company pays 7.5 and you pay 7.5 taxes. But as the freelancer, you're going to pay all of it. So bear in mind that you are both the employee and the employer as a self-employed. So that's why it is so important to make estimate payments that you don't pay penalties or interest because you did not do that. And next week I'll delve a little bit more on why estimate payments. That topic I'll go in detail next week. Why estimate payments and who should make estimate payments. But in summary, once you are self-employed and you are getting a 1099, because for the most part self-employed people get 1099 from the corporation or the company, they, so you can set that up. Okay, the next question Tennessee asks, what if I miss one quarter? If you miss one quarter, you can just double up that the next quarter, or you can you can either pay that in whenever time you get it, or you can double up for the next quarter. But if you're not able to pay the 4 quarters, they you would know that, well, my tax liability is going to be a little bit more. But it's best if you make sure that you just pay the 4 quarters. As I said, it's better that you pay one or two. You may not be able to pay all 4 quarters. Sometimes that happens, but at least you know that it's important to make quarterly payments. So having that organized, you are able to make those payments, you're able to be more proactive, and then you're not blindsided. Because if you see sometimes when a client comes in and they have no clue that they would owe, it is so devastating, because it's just, how did I, how? So this is why we're sharing with you, so you can know, you can put things together, you can say, okay, now I have a handle as to what is happening, and then I can be more at peace. I can be at peace. So you make sure that you organize yourself, put your stuff together, get that box. I was trying to see if I could pick up one, but I don't want to turn things all over the place, so I can pick it up. But I have these little box. And for those of you who are not sure as to how things work, don't be afraid to speak to your tax professional. Don't be afraid. We don't want you to be afraid of us. We want you to be equipped. So when we're sharing the information with you, you have a little knowledge. So, oh, that's what you were talking about a couple months ago. We don't want you to be surprised unless it is, a new tax law, and we will learn together. We will share with you why that is so. I see a lot of activities going on. I see Theda said, welcome, Tensi. I'm happy you're able to get your questions answered by Queen Miriam. Thank you, Theda. Um, she says, indeed, she's very knowledgeable. I want my clients, my viewers, to be knowledgeable. I know taxes is not the field for everyone, but that's why I'm here to share with you, and we can learn together, we can grow together, and we can become stress-free. Because guess what? After you care for everything, after you care for your job, you do your job to the best of your ability. You take care of your clients as a self-employed person. After you do all of that, you want to make sure that your tax professional have your interests at heart, and you can go on your vacation, whatever you want to do. You can just go on vacation and just relax, because yes, I have the books together. I have, mark you, a lot of businesses start with, a little book, paper, then they transition to Excel spreadsheet, and then they are able to buy a tax program. Having that, seeing the transition from there to there, you realize that it takes a matter of learning. It takes a matter of just juggling things and getting information from the tax professional, your financial advisor, getting all of those details. It helps you to manage things better. And once you get that part out, you'll be so surprised how you're able to assist others with just that little preparation you do. You can help your family members, you can help your friends. So, no, man, it's not that daunting. I went through it. So I'm able to share with my fellow friends, family. This will be a topic that you feel free talking about over dinner. Tax planning? No, man. Once you prepare these things, it's a no brainer. I can just take up my little box and take it to my tax professional because I have organized things throughout the months, and so I'm able to be at peace. When you're at peace, a lot of things you can think about. You hear the birds singing, you you walk around, you just feel at peace. You can get up, you can take a walk in the mornings at peace. Preparation keep you at peace. So, as we continue with tax planning, as we follow through with prepare for your wealth, let's make sure that the mindset is there. The mindset for wealth, one of the mindset steps is prepare, prepare, prepare. Once you're prepared, we're in a better position to take advantage of opportunities when they come our way. If we're ill prepared, they pass us by because when we're not prepared, everything becomes urgent and important. And think about everything becoming urgent and important. You're juggling, you have everything in your hand, you don't know what to do. You have everything one time. Everything becomes urgent and important. And guess what? You cannot focus on so many things at one time. No, 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 no. So being prepared, get that box, put those papers together, value your time, make sure that all of the things are there so you are much prepared. Theta said, apart from W-2, is there other papers one should have to take to their tax professional? Now, for apart from W-2, that's you if you're in school and you if you're in college, the I know we still get credit, we still get deduction for tuition credit. That's one. If you're a homeowner, your mortgage interest statement. Um, if you are, if you invest, you may get your statement where you have either if they sell the investment or if you're or you may have interest from the bank. Um, so you would take your interest statement. Um, there are many others depending on where you are, because for the most part, I know Canada and US is somewhat similar with a lot of things. Um, Other countries may not have the same name, but it's similar things: interest statement, mortgage statement, your bank interest, because all of those are part of your income. And if you have stocks and you sell them, you will get a statement that shows the stock transactions. That also is a part of what you would take to your tax professional. So remember, it's not one size fit all. There are so many different variables for each person depending on what they do during the year. So your tax professional will help you, will guide you. If you are going to a new person, make sure you take the last year tax return to them so they can have a an idea as to what was incorporated in that tax return. And they will also ask other questions because, God forbid, if the return wasn't done properly, maybe the return was done by the individual and they may have missed a lot of things. And so, analyzing that return, we are better able to assist and let you know, okay, this was missed or this was not done properly. You may have taken uh, an area, or you may have added something which should not have been there, and of course you may have gotten a big refund. Then when we analyze it and we said, how did you get that? And you said you weren't too sure as what you were doing, because sometimes a lot of people do their return, if it's just a simple return with that program with AI enhancement, they can do it, but sometimes they may have missed some things. And we who are, have a keen eye, we may see it and express to the client that this wasn't done correctly. And of course, sometimes they may end up owing after they have gotten that refund. But it's good to identify that with them, but it's not our responsibility to amend the return if the client decides they don't want to do it. We can share with them that this is what it is after we analyze. If they have to pay more, we show them that this is what the tax liability would be if it is done correctly. Now, the onus is on the taxpayer to file the amended return, not the tax professional to demand them to amend the return. So we share, we show, but the ultimate decision is for the taxpayer to file that amended return if for any reason when we do the analysis and the figures change. But it's a good idea to make sure that you understand what's happening with your tax situation, that years down the line, you are not sent a bill that your income was understated, because IRS will not send you a letter that your income was your expenses was overstated, or your income was understated and we're sending you a refund. No. But if your tax liability was understated because of some deductions that you take, which you were not eligible for, then years down the line they will send you, and there's interest and penalties that is accrued on that because the return was not filed properly. So we are here to help. Mark you, we're human. Any one of us can make errors. But it's important, once we identify the errors, we share with you this is what it is, and this is what the tax consequence would be. It's on the taxpayer to make that decision to amend that return and be in the right. Not our responsibility. We share, we show you what it is, and then you make the decision to do otherwise. I hope this session today, this podcast, help in some way to get you prepared for tax year 2024 as we prepare for your wealth. Tax planning, very important. You can sit around the table while you're eating and talk about it more freer because you realize it's not that daunting. Until next week, when we have another episode of Mindset Monday, have a spectacular week as you contemplate tax planning 2024. Have a wonderful evening.